Hey everybody, this is Halstead and Andrew McMillan with REH CPA. Today we want to talk about some of the tax benefits that parents can realize from having children. We've got Andrew McMillan here with me today. Andrew, what are some of the tax benefits that parents can take advantage of?
Yeah, so there's definitely several. So the first thing to make sure, though, that you're doing is you're claiming those kids, those children that you have as a dependent on your tax return. So there are rules on who is and isn't a dependent, but for most situations, if you have a child that's yours, that you're providing a house for, providing for their livelihood, they're going to be an eligible dependent of yours that you can claim on your tax return. So one rule to be mindful of, though, is like they must be less than 19 years old or less than 24 if they are a full-time student. So if you have one of those dependents on your children on your return, then they would be a dependent of yours.
And make sure nobody else is claiming them as a dependent.
Correct. So, but claiming them as a dependent now let you take advantage of some other tax deductions. So, one credit that's available to you is the child tax credit. It's a really good credit. It's about $2,000 for every child that you have that's under 17 years old. You would get a $2,000 child tax credit. There are some income limitations to that credit, so it could get phased out, but those limitations are pretty high. So most people qualify for that $2,000 child tax credit, and that's per child that you have that's under 17. Another credit to be mindful of is the child and dependent care credit. So this would be a credit for paying someone to watch your kids, your dependents, while you work or your spouse works or you look for work. That's another important one to remember. If you were looking for work and had to pay someone to watch your children, you could potentially qualify for this credit. Now, the child does have to be less than 13 years old. You can't pay somebody to watch your 20-year-old, but they have to be less than 13 years old. If you do, then you would qualify for this credit. It's about 20% of eligible expenses that are capped at about $3,000. So if you have $3,000 worth of expenses, multiply that by 20%, you'd be eligible for
and
a credit.
And it's per kid, right?
It's per kid.
Per kid.
Mm-hmm. Another good credit for people to be mindful of is if you have kids that go to college or any school after high school, you can qualify. There's two education credits. There's American Opportunity Credit and a Lifetime Learning Credit. So depending on your situation, you may qualify for one of those, and they're really good credits. They can potentially put up to $2,500 back in your pocket when you do your tax return to help.
Which is kind of a drop in the bucket compared to what college costs, but it's something.
It is something. So just be mindful that there are several credits and deductions out there if you do have dependents, and it's always good to go through your situation with your tax preparer, your CPA, your accountant to make sure that you're taking advantage of everything that's on the table.
Awesome. Well, really good information, Andrew. So if you're a parent with children and you have questions about some of these credits that you potentially qualify for or deductions, feel free to give us a call and we'll help you out. Thanks.